Welcome to The Spread, JLN's weekly recap of options markets and other financial miscellany, brought to you by MyX. I'm Spencer. Here we go. Here's just a smattering of the headlines that have crossed the wire in the last week or so from a variety of publications. Trading lull engulfs stocks and commodities. It's a golden age for short vol trades. Traders wager on calm as volatility evaporates. Dead calm in currency markets unnerves investors. Stock market volatility is quiet for now. And I could go on. I mean, there's always a bunch of those ubiquitous rote, quiet, too quiet headlines, but you get the idea. The VIX is low, and those pennies on the pavement look pretty good again, despite the distant sound of heavy construction machinery. Now, speaking of steamrollers, did you know that the band Buffalo Springfield is named after a steamroller manufacturer? Save that for trivia night. Now, one of the big stories this week was the cancellation of the purchase of Harvest Volatility Management by Victory Capital. The deal had a clause in it that the purchase could be called off if Harvest's revenue declined by more than 20%. So I think we can guess what happened there. And man, I didn't think I'd have another gavel-banging segment so soon after the last one, but here goes. 1. Jitesh Thakkar, the software developer roped up in Navinder Sarau's spoofing activities, he built the software that Sarau used, had the case against him dismissed with prejudice. Now, with prejudice means this particular case is dead and buried, which is nice. Second, Equitech was back in the disciplinary doghouse as the SIBO's Business Conduct Committee upheld a decision from 2 years ago to censure and fine the firm $50,000 for 6 violations of 2 rules. Now, those non-millennial viewers might recall some of the other activity involving Equitech from 1999 to 2005, for which they were penalized in 2009 to the tune of $250,000 and a disgorgement of $1.4 million in profit. Now, that was for, quote, on tens of thousands of occasions, filling customer orders through the firm's own account, essentially trading against its customers and voiding, quote, its basic obligation as a specialist on SIBO and Philex. Now, third, you might recall the ongoing screwiness in the case against SIBO for potential VIX manipulation. The legal team for the plaintiffs is wrapped up in infighting as one of the lead attorneys, last name Justice, took a job at a different law firm partway through the case. Now, her prior firm wanted her off the case as co-lead, but she wanted to remain on as lead since she'd put in so much work on the case. Now, the update is that a judge just ruled that she could indeed stay on the case. Confusing. Fourth, there is an ongoing fight in Aurora, Illinois surrounding access to the CyrusOne data center that hosts CME. Now, we did an episode on the data center antenna tower kerfuffle before, but basically a competitor built a tower to compete with CyrusOne's, and needless to say, CyrusOne is PO'd and is suing the firm with the competing tower, known as Scientel, as well as suing the city of Aurora for approving the competing tower. Now, Scientel claims that currently it doesn't have any trading clients, but that will change soon. Meanwhile, firms that have been tied to CyrusOne's tower are McKay Brothers, Jump Trading, Virtu, and DRW. Now, did you ever think the city council of a town with only 200,000 people would have such power over high-frequency trading? I sure didn't. Anywho, we're heading down to the Options Industry Conference next week, so if you're down there, please say what's up. Till next time.